What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a MULN, raw price action and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them can join our cab. Details in the description below. With that said, let's get started. Okay, you guys, so we're looking at a pennant here, and this pennant usually happens after an uptrend. We noticed that we were in a bearish formation, and we actually realized the formation's true nature, right? So we actually did sell off, which is how we were able to notice that we were in this pennant in the first place. This pennant can actually be considered a consolidation formation as well. The good thing is that both of those formations are bullish. And this triangle actually does have a price objective for us to review as well. So we can actually take a trend line from the hypotenuse of the triangle to the lowest point of the triangle and apply it to the point of breakout. So we applied it to this area here because we're guessing as to when we could break out. We can actually apply it here as well, and it'll be the same thing. So if we were to break out from this point, we're looking at a pretty interesting target here, you guys. So the top of this trend line is actually landing right at the 2.618 at 74 cents, which is curious because the 618 ratios, the 1.618, the 0.618, the 2, the 3, and the 4.618, sorry, it's a little bit above. Those are all psychological targets. We as humans like to trade within these areas, or like to take the trade or use these as primary supports or resistances. So very curious that it would be taken there. But we did talk about the pennant continuing on the analysis that we made on Thursday night. And it moved as such. So as you can notice right here that we have actually moved above the 7-day exponential moving average. Apologies if you can hear my toddler right outside, you guys. He's actually making some noise. He's eating. We have used it. We're using it as a support now, you guys. We can be guided towards the upside. And as you can see, we're now facing some resistance right at the 30-day exponential moving average, which is this one right over here. Now, the candle from the Friday's price action, this was a late session. You can see that we used the 0.236 fib ratio as a form of resistance. And the candle itself actually closed right at it. Which is pretty good, right? Now, the reason why I have three, this is for the newcomers, you guys. The reason why I have three Fibonacci retracements is due to ranges. So I'm looking at this total range here, and we have a low and the high of this range. So this indicates this Fibonacci set of targets for us to review. This was particular to the first day we traded at the new zone, which is this range right over here. And this one is particular to the price action that happened on Wednesday. Now that we have these newer lows right here on these candles, we can actually start making an adjustment to this fib ratio here. Now that we have that, the high of the ratio is actually right at the range high here, not the overall high, just this range high, and that can give us some room to move on. So now, if with that adjustment, you can actually see that we used the the 0.236 as a form of support. Let me just draw a trend line here so you guys can see. We used it as a form of support right here with this candle, and you can see that we moved on above it. So the adjustments are made correctly. Okay, you guys, let me look at the notes right here to see if we are within the right path. Now, for the newcomers, one more thing. There is a price objective. I'm not sure if we actually talked about it, but yes, the price objective here for this triangle, taking a trend line from the hypotenuse to the lowest point of the triangle, which would be down here, is this trend line. And putting at the breakout here, we're looking at a target of about 74 cents. This can likely, and it's also confluent with the overall range 1.272, and it is dangerously close to our first fib 3.618 and our 2.618 of the newer range. So there is the likelihood to where we can actually wick to the top of this range right over here and use either the 2.72 or the 2 fib as a form of as a form of support, right? So let's just pull up some SMAs and see if there's anything we can review right here. Okay, so yeah, we the top of the triangle is confluent with the 50-day simple moving average. This is actually something that we have to break out of, guys. That's a little bit of a resistance. I think it'll be temporary though. The first likely resistance that we can touch would be the 54-cent 0.618 before coming back and testing the newly converted resistance into support of this formation here before a continuation to the upside, you guys. If we were to wick down, we still have the SMA 100. I don't see this likely just yet, you guys, but we do have the SMA 100 right down here at 45 cents, but we're trading within a range right here. And as we get closer to the apex, the likelihood of breaking out of this pennant, its bullish pennant, it's starting to get greater. Usually these triangles tend to realize when they're 70 to 75% complete, and we're pretty close to the apex now, you guys. So this is likely to break out soon. Okay, so let's go ahead and move on to the next chart. Let's see here. Okay, this is the 12-hour chart, and you can see that we've been using the 100-day simple moving average as a form of very reliable support. So now that the SMA 10 has moved above the SMA 100, this could actually help us to the downside, assist us to the downside. Let me go ahead and reword that. And if we were to touch lower lows, there is a psychological component here for us to consider. There is this gap here. And it is between 39 cents or 40 cents at the break of 39, right? So this is about 40 cent to 41 cent. It's a 1 cent range that can be used as a form of support as well. So now I'm actually curious about this one right here. So this 45, 40. Okay. All right. Yeah. Never mind, you guys. So yeah, we do have this and the 382 at 37 cents. But I'm not saying that we're going to go down here. I'm just saying that this could be a relevant area of support. Right now we have support of the SMA 100 and the 0.618 at 48 cents, and also the formation bottom at 49 cents. So we have a confluent support just everywhere here. So to break that support is likely some bad catalyst or a bad news event or a whale selling out, right? So let's move on to the statistical side of this. For the new viewers, this is gonna be for you guys. Also, well, actually for the reoccurring viewers too. This is volatility we're looking at, represented by this indicator BBWP. We are now officially in a contraction phase. So we were actually looking for this. So we were looking for us to come from extreme expansive levels to the downside. So when we start printing these red bars, or actually when we start trading above the 90 percentile of volatility, and also below 15% or 10% of contractive levels of volatility, this is indicating a pretty strong move. So the longer it stays up here, or the longer it stays down here, like this iteration here, it's signaling up a strong move to either side. And the way that we can gauge a bias in direction is by pairing it with a momentum oscillator, because volatility is direction neutral. So at this point, we are starting a contraction phase on the 12-hour chart, and the 12-hour stochastics momentum is suggesting a continuation to the downside, which could likely be this situation right over here, to where we can use this as a wick to the bottom. It could be something like wicking down here and immediately recovering to the upside. That's something that Wyckoff theory calls a terminal shakeout, or a spring of sorts. So that is also in the cards, you guys. But we are starting to contract right here, and this is coming from a huge. Every red bar is a 12-hour read. So we've been there for quite a while, and we've been actually tracking this since we were down here, you guys. So we're very familiar to what's happening here. Stochastics is suggesting a downside. For now, you guys, this can be corrective. So if we find a support within these very relevant areas, this can correct to the upside and this can contract all the way to the bottom, forcing an impulsive move to the upside. So let's look at the notes right here. I want to make sure that you guys are on point with me. Let's get the moving averages in. So this is the yellow line. Let me get the SMAs out for now. Yellow line is the 7-day exponential moving average. And we are facing some resistance from this right now. And now, just so you can see, the 30-day exponential moving average is also confluent with this range of support for us as well. Now, I have taken note of every iteration where we've started to contract from these highly expansive levels. So every single time that MULN stock has started to contract from those extreme highs, I've taken note of it by hand, and I have now created a set of averages for us to review. Okay, so let's go over that bullish side. So because there's two sides to this. So we're looking at a total of 21 iterations. Now the upside iterations that were guessed correctly to the upside were 12 out of the 21. That gives us an averaged upside accuracy of about 57.14% chances that we can go to the upside, with an averaged upside thrust of 172.12% over the span of about 13 and 3/4 days. This is proof of work. Now, inversely, we do have 9 downside iterations that were guessed, that were actually guessed to the downside. This is the upside iterations of 12. This is what we got right here. So now the average downside thrust based on these 9 iterations is 42.85%, with an average downside thrust of minus 93.47% over the span of about 24.5 days. And I don't see this likely, you guys. The minus 93% puts us at, I'm not even going to talk about those lows because people have been like, oh, whatever. But I'm just giving you the statistics. Know that these are statistic metrics and they are not certainties. So this is just back testing historical and statistical volatility so that we can create an averaged mean for us to be able to evaluate desired targets or desirable targets. So let's apply the bullish scenario right here. So we're looking at let me go ahead and do this. There we go. So we're looking at an average upside thrust of 172.12%. Let's add that. Let's apply it to our current position and see what that gets us. So we're looking at a very interesting result here, you guys. This is for the new viewers if you haven't seen this before. We're landing right above the 2.618 golden ratio. So this is very interesting because it has a lot of confluent areas to it. The 172.12% is confluent with our wick high of July 11th right over here. Now, as you can see, it's a very relevant range that we've used as points of support and resistance. This is all resistance right here. That's all resistance right here. Resistance. We used it as support right here. Resistance there. So this is likely a key of an inflection area for us, you guys. So know that in an impulsive event, we can rocket ship to this area within a session or two. As you can see, this candle right here, this is nonsense, you guys. We can, MULN has the power to just jet all the way up. So I'm bullish for MULN in the long term as well as the short term, you guys. But there are things that we do have to keep in mind before we can continue. So let's go ahead and move on to a bias in direction. So we're going to use the RSI for that, you guys. So I actually caught a smaller drive of hidden bullish divergence here. So, and it could likely start to be in place soon. So this is a good thing. This aside from me finding this larger phantom drive of bullish divergence, and this was the 12-hour divergence that we caught right before we were talking about this upside move. We caught it right down here. So these are things to definitely keep in mind as we're trading it, you guys. So now let's open up a multi-pane window to see if we can get a bias for tomorrow and potentially Tuesday. We're just gonna make these a little larger. Okay, so let's focus on the immediate short term. Let's look at the 30-minute and see what it has to offer. So new viewers, please listen up. This is apologies to the regular viewers. I just have to explain this so you don't get caught with me talking nonsense. Regular RSI here, you guys. So we have split the RSI into two halves. This top half being the bullish control zone, bottom half being the bearish control zone. Both zones are split in two as well. This is bear strength percentile. This is bear weakness percentile. This is bull weakness and bull strength. Like any other RSI, above 70% is overbought, below 30 is oversold. So just in case you catch me saying some things, you won't be lost in translation, right? So we have the 30-minute suggesting a downside, but with a very, very weak pivot. We are trading above the moving average, which is bullish, and we are within bull weakness. However, it is within the shallow areas of the weakness percentile, which can indicate some potential sideways trading. This is very reminiscent to what's happening to literally 3 other tickers that I've already made videos for that I'm going to be uploading as well, including AVCT, CMRX, and IMBI. They're all suggesting a neutral thing, and that's likely to the catalysts that we have coming up. Wednesday being the Fed meeting for the rate hikes, or not, and Friday being jobs report. I also know that we have some stuff coming up next week as well, you guys. So very important times right now. For the data reportings that are going to be coming out in the macro fundamental. So in the macro fundamental space. So now the 30-minute is suggesting that, right? We can try to see the 15-minute. This is a micro time frame. It's also, this is in the deeper area of the bull weakness, which is good. And we're trading above the moving average. The moving average could be a little bit of a hint for us in saying that we are likely to continue to the upside, and also that we're so close to the bull strength percentile here. So that's for the immediate short term though, you guys. Let's look at the buy hourly to see what we got. And buy hourly is giving us a direction, a neutral direction here, you guys. And also within that dreaded shallow areas of either weak percentages. So this can also indicate some sideways trading. Within the same pane, let's look at the 4-hour and see what it's got to suggest. 4-hour has a downside pivot. The moving average is primed to fail the bullish control zone, the bull strength percentile in particular. We are right in the middle of the bull weakness here, you guys. This is more of that indecision that I'm talking about. I'm not kidding. Everything is reading like almost the same. It's just, you know, the markets don't like indecision, you guys. We like clarity. So I mean, logically, we're gonna do these weird moves. So let's look at the 8-hour right now, you guys. So the 8-hour is suggesting a continuation to the upside, and it is within the bull strength percentile. However, in the shallow areas, which could lead us to a dip into the bull weakness percentile, but it is suggesting an upside. So we got to give that some weight. 6 hours potentially doing the same thing too. Again, with those weak pivots, you guys. So let's go up higher. We already saw the 12-hour, so let's look at the daily. Okay. Daily is suggesting a downside, while the moving average is continuing on to the upside and now moving away from the bear strength percentile. So we are well within bull strength right here, you guys. So this is likely to correct. By daily, let's see what it's suggesting. It has entered the bullish control zone, particularly the bull weakness, and is right in the middle at the 50 percentile read and doing this weird pivot just like the other ones, you guys. So this is giving us more indecision. It's very difficult to be able to tell what the markets are going to do, especially right before a Fed meet, you guys. No one can guess that one, because if I don't like to play Fed plays, you guys. So especially because the macroeconomists have been literally wrong every single time we've had a rate increase. Like, we have been wrong, I think, 8 times already. So there's no way that we can play this, you guys. We got to stop guessing it. And we have to make sure to play these things safe. If we already have long positions open, make sure that we just set a stop loss, right? Well, first of all, I'm not a financial advisor. I can't advise for you to actually sell or buy any asset. Please take whatever I do show in these videos as a form of entertainment to your own DD, and we'll be okay, right? But yeah, you guys, this is giving us a lot of indecision, and it's likely to what's happening for the catalysts coming up. So this indicator is particular to me, you guys. I have partnered with Crypstex trading team, and they have made a set of indicators that are named after me, ARCa. So this is the ARC armor. And what this does is that it gives us short and long signals based on trend. These are to be used within the 1 minute and 30 minute, maybe hourly, for momentum trades, day trades. So the good thing about what's happening right here is that you see how these lines are printed here. These are all exponential moving averages that are set very close to each other in an algorithm to be able to determine the overall direction in price action. So as you can see, we have a long signal right down here. So see this short signal, it went down. We have this long signal right here, it went up. We have a long signal, it went up. So this tool is very good for us to confirm the direction that we're trying to guess. So this is ARC Armor. This one here is ARC Enhanced MACD, and we are also with a bull signal. So this is also giving us a buy signal in the immediate short term. And this is the ARC Whale Spotter, comprised of many indicators that are commonly used. For example, we have the red line here. This is a VWAP. It does have a divergence indicator. It notices the divergences within the RSI and price action for us. So it has an RSI built into it. And also something very important, it does have a money flow index. So it tells us when money is coming in and out. So as you can see, money was coming in, it came in, and then as money was going out, it's showing us that it's starting to print a darker color. And now we're getting right the bullish divergence here, and also the pivot towards the upside slightly, which indicates that money is coming in as well. So these indicators can be available to you guys. Just make sure to DM me, and I can give you the details on this. Included with these indicators, I'll also include my own BBWP and the ARC RSI that we just looked at right before this, you guys. But this should be a pretty good place to leave the analysis on MULN. I do not suggest entry just yet, you guys. I am personally fearing what the Fed's gonna do, and I honestly don't think that they're gonna give us a 50 bip. I could be wrong, but if they give us a 50 bip rate hike, then the markets are gonna go berserk. So if they give us a 75, then the markets are going to sell off, you guys. We're all like overly optimistic. I'm not sure, but please share in the comments below what you think the Fed is going to say, what you think where MULN is going to go. You can always reach me on Twitter. You can always reach me on Discord. Please make sure to follow the links in the description below. You can join our cab, and yeah, you guys, we can also discuss it here on YouTube as well. But this is primed for a breakout, and this is also a bullish setup. So just know that these triangles usually tend to realize when they're about 70 to 75% complete, and we're right about there. So this is getting close to that breakout, you guys. So practice risk management. Use your stop losses. I mean, if you want to gain entry, you could possibly be at about 49 cents, or using these lows right here at about 47 cents, so that we can be ready for an upside move. I would severely suggest for you guys to set a stop loss, a hard stop at 43 cents. No matter what happens, you guys take a minimal loss and just let it ride, right? So that we can survive for the next day of trading, you guys. Anyway, I'm going to leave it here, you guys, and I will catch you at the bell tomorrow. Adios.